Live, I'm Josh Fenton, CEO and co-founder. Today, like just about every day, even though it's mid-September, is a crazy news day. There is a lot going on. If you haven't seen the headlines, Governor McKee yesterday announced that he was rolling back the deadline of October 1st for healthcare workers and other healthcare-related license folks to get their vaccination. That's been pushed back. Secondly, if you haven't seen it, there's a interesting new issue emerging at the Pawtucket Armory. And third, we'll have a story up just shortly. It just broke. Matt Brown is going to run for governor again, further crowding that Democratic primary for 2022. Let's go to our friends at Mott Chace. We love this segment every week. Nelson Taylor joins us. Nelson, thanks so much.
Thanks, Josh.
Okay, it's hot and heavy. We were chatting before the show. The Wall Street Journal's got a story that says maybe the real estate market's cooling off. We get the data every month from the Rhode Island Association of Realtors, and they show 20% year over year, 16% year over year. Median household single-family house going up to $390,000 in Rhode Island. Nelson, you tell us, where's the market?
Well, I mean, the numbers from August tell the story, the same old story. You know, we've got sales prices up 17%, we've got inventory down 30%, and we've got days on market down 40%. So the data from August is the same story, but on sort of the day-to-day basis, the nuances of the business, what myself and the Blackstone team are feeling within the market is that things are changing a bit. The sort of verve, the clamor for properties isn't the same. Does that mean that they're not selling very quickly for over ask? No, absolutely they are. But there's just not as many people offering on every property.
And just to distinguish, when you say it's not quite as hot as it was, you're talking about 6 months ago at the beginning of the spring season, in which the market wasn't even at a record level. It was at a record level, right?
Absolutely.
You guys would have an open house and 40 people would be lined up down the street and you'd have 20 offers by the end of the day.
Yeah. And again, it's not like that's not happening, but for the most part, we're seeing less offers on property. The top numbers not going up quite as crazy, not as many contingencies removed because they don't have to, because they're not competing at quite the same level as they were 6 months ago.
At the macro level,
Josh, it doesn't mean that you're going to get a deal. So I don't want buyers to be confused. This is not a buyer's market.
That's right. My offer to Heidi over on the property on Rochambeau and Blackstone for $1 million has not been accepted yet, right?
That's
okay. Right. So let's talk about some macro issues. There's two macro issues. Stock markets looks a little bumpy the last couple of weeks. Down last week, a very rough opening to the week. This week, also on the macro level, the Fed's supposed to meet this week and kind of sort of tip their hat that they may be cooling things off because they think there's both a recovery and a little bit too much inflation. So all these things mixing up in the pot, how do you foresee the fall? Is this the last great season for the seller here in Rhode Island?
Yeah, that's always the biggest question, but I called my go-to mortgage broker yesterday just to talk about rates and what his predictions are for the future. And they're really feeling like, the sub 3% is going to remain at least for the next 6 months, but by the end of next year, we could see upwards of 4%. So we have buyers every day that ask us, like, why would I get in the market right now, versus wait until there's some sort of cool down? Well, the question is what is that cool down going to be? In most of the top markets, the worst in 2008, it was only down 10%. So paying that extra money now at a 2.7% interest rate is actually a smarter long-term investment than paying 10% less next year at a 4% interest rate.
Yeah, that's if you need a mortgage, and as we all know, in some premium areas, mortgages aren't a big factor. Also the number I wanted to pull out of the Rhode Island Association Realtors numbers from August was that incredible amount of buying in Rhode Island coming out of New York, Massachusetts, and Connecticut primarily. In places like Newport, 40% of the transactions involving somebody from out of state. That's never happened, certainly in my lifetime. I can't speak to colonial times, but what impact is that happening in those premium destinations as well as on the east side?
Yeah, it's a big impact, and it's. I think it's going to continue to be. And one factor we certainly need to talk about is this, the growing, second wave of this pandemic. If we look at the first wave, what happened is there were less sellers that wanted to put their homes on the market. They didn't want people coming inside. Everything caused them a little bit of pause. Not as many buyers, though, pulled out of the market. So what we had is a tightening of inventory from an otherwise already tight inventory. So the pandemic actually helped the market value-wise. At the beginning, there weren't as many transactions, but value still stayed strong. And obviously, it's grown incredible over the last year. So my predictions is that we're going to see probably a little bit of the same here coming over the next 6 months. Less inventory, still strong amount of buyers in the market. So I think prices are going to stay strong into next year.
Will we see, I've asked this question before, will we see the piercing that the median household price in Rhode Island will exceed $400,000?
Yeah, I think so. I mean, if you look, my primary market is the east side of Providence. Right now, there are 16 properties on the market on the east side, and 10 of those are above $1 million. That's pretty astronomical. So, this, median price range on the east side, it's almost $550,000 now, Josh.
Yeah, it's just amazing.
Or the entry level price point, I mean.
Yeah, and it was not long ago that $550,000 on the east side of Providence bought you pretty much any house you wanted.
Yeah, it bought you a fantastic house. But now that competition, at that price level is extreme. I think we are seeing a little bit of a bloating of the market above that $1 million range.
Are people pricing their homes correctly, or are they getting a little greedy right now as they put their house on the market? Are you feeling? Are they listening to your expertise, or are they predetermined as to, oh, I saw Tom's house down the street go for 1.1. Our house is better. It should be 1.2.
Yeah, well, it takes a lot more convincing these days, for sure. But the data is there. It's more of a strategy, and the strategy, at least in my market, for most real estate agents, is to price the property competitively, get those multiple bids, get those people competing against each other, and drive up the prices. So, sometimes we're seeing, people wanting to price the property themselves. And there's data there to show that it'll shoot them in the foot.
You see a significant fall season. Walk us through a little bit of what you expect this fall, and then I want to talk about next spring. Will next spring be as robust? But
I think the fall is going to stay the same. We've got 2.75% interest rates right now. Almost at 2% for 15-year mortgages. I think because of this growing wave of the pandemic, we're going to have less inventory. So I think demand is going to remain extremely strong. Spring, who knows? I could have never predicted where we are right now. So I don't know. But what people are telling me is that there's got to be some sort of shakedown, some sort of shakeout, and that we are going to see rates go up. So those are going to be two pretty prominent factors, I think, that are going to cool the market a bit.
Is anyone sitting by the sideline on the buyer side right now? Are they just so frustrated? They
Absolutely.
They look at these prices, they look at the lack of inventory, and they go, "Oh, we so need another house because of the new baby, the new this, the new that, but we just can't compete right now."
Yeah, well, I just got an email a couple of days ago from a client who said they're sick of holding on, they're sick of renting. Their life is just, the kids are getting older, getting crazier, et cetera, et cetera. They need a bigger place. And my message was to them is, as a buyer, you got to follow your lifestyle needs. It makes sense to buy right now if it makes sense in your life to buy right now, right? These rates are historic. If you're a long-term holder, there's going to be no issues whatsoever. In the top markets in our area here, each cycle you're going to realize at least 50% equity in your property. And I've got lots of data for homes on the east side, for example, that have realized 100% over the last 2 cycles. Each cycle 100%, so 200% equity in a 20 to 24 year period of time.
Yeah, it's incredibly remarkable as to what's taking place, especially in the premium. Are there any buys anywhere? And I'm not talking discount Bob's buys, but I am talking about, are there any little niches like, oh, if you want a farmhouse in Burrillville, sure, it'll take you an hour to get into the city, but
right.
Oh, there's some interesting things there.
Certainly, but everything is elevated. So, it's all, everything's elevated. There are no buys. Even the fixer-uppers, the flip properties, those are obviously extremely robust because there's so many of those types of buyers and developers in the marketplace.
Is there any flipping per se going on?
There is, absolutely.
Or is flipping kind of getting held back because there's so much demand by people who want to be owner-occupied?
No, absolutely. There's a lot of flipping going on. Certainly, it's been harder for the flippers to find properties, but there's definitely a lot of development still going on.
If you've got a prediction for the spring, what is it?
I don't think we're going to see a real change in the market until this time next year. Inventory, I think, is going to remain extremely down for the next 6 months. Buyer demand is going to remain extremely strong. So I think it's going to be a lot of the same, Josh.
I appreciate Nelson Taylor from the Blackstone team at Mott Chace Sotheby's International. We always like having you on and hearing your expertise. You are a war-torn veteran of the real estate wars, and with great insights into especially what's going on in Providence and on the east side. So I really appreciate you taking the time.
Thank you.
For everybody else, stay tuned for much news. We've got a new candidate for governor. I'm guessing it's not the last person to jump into this race. And if you haven't gotten vaccinated, please get vaccinated. There's kind of no more excuses. Every day we put up the numbers. It's another 130 to 160 people in the hospital. It's 2, 3, 4 deaths. It looks like September deaths are going to be double what August deaths were. August deaths were 5 times higher than July's deaths, I believe. So stay tuned for much, much more, and please be healthy. Thanks, everyone.